This is Money Bites. I'm James Blair, and today's topic, volatility. Shares, property, dare I say cryptocurrency, why don't we all invest in them? If we know they're going to go up in value over time, maybe with the exception of cryptocurrency, then why don't we all invest? Well, it's because our investments don't go in one linear fashion going up over time. They go up and down in value, opposed to, say, a term deposit. Now, a term deposit, you're going to start with a certain amount of money, and at the end of the period, you're going to end up with an amount at the end. Now, that doesn't have any volatility, any fluctuations. We know the outcomes of the investment. Let me give you an example. The S&P 500 is the top 500 companies in the world. In 2008, that dropped by about 38 odd percent. Now, the long-term average is a 10% return, but we can have a really sharp dip in the short term. So when we think of words like volatility, once again, it's just a fancy way for financial people to kind of explain terms. Really, it only means that your investments are going to go up and down in value over time, and it's not going to be a linear increase over time. So you're just going to want to make sure when people use the word volatility, remember it means that your money is going to fluctuate. It's probably going to go down at some point, and you need to be comfortable with that it's going to align with your goals and your situation. So in 2 minutes, that's volatility on Money Bites, and I'm James Blair.